Thank you for joining Community Newspaper Company, WLVI TV 56, and the Institute for Politics at the John F. Kennedy School of Government for our pre-election debate on the graduated income tax. My name is James Hines. I am Associate Professor of Public Policy at the John F. Kennedy School of Government, and I will be the moderator for this evening. Before I outline the structure for this evening, I'd like to give you the facts about questions 6 and 7, and introduce the debaters and panelists beside me. Today, Massachusetts imposes a flat 5.95% tax on what is called earned income. Question 6 on this year's ballot would change the state constitution, which now requires a single income tax rate. Question 6 would replace it with a proviso that the state have graduated income tax rates. Question 7 on this year's ballot is not a constitutional amendment, but instead a law. Question 7 would create 3 new tax brackets in Massachusetts at 5.5%, 8.8%, and 9.8% rates of taxation, with the higher rates applying to more income. We have provided handouts that detail the proposed changes, and I recommend that you refer to them throughout the evening, take them home, and enjoy them there. Now on to our debaters. To my left are the individuals promoting the passage of questions 6 and 7. Jim Brody, to my near left, is the campaign director for the Campaign for Guaranteed Tax Relief, and he is executive director of the Tax Equity Alliance for Massachusetts. Beside him is Mitchell Kurtzman, who is chairman and CEO of PowerSoft Corporation, which is located in Burlington. My far right represents the opposition to questions 6 and 7. Barbara Anderson, in the near right, is the executive... Are the same people clapping every time? Barbara Anderson is the executive director of Citizens for Limited Taxation. And beside her is Mike Widmer, who is president of the Massachusetts Taxpayers Foundation. Our panelists who will ask questions for the first half of the evening are members of the local media. Mark Lasesi, to my right, is political editor of the Tab newspapers and State House bureau chief of Community Newspaper Company. And to my left is Vicki Ogden, who is publisher of Cape Cod Community Newspaper Company. The format for our evening is simple. We will begin with 2-minute opening statements from each side, and then our panelists will begin to ask questions. Each campaign will have 2 minutes to answer the question from the panelists, and then we will allow the opposing campaign 1 minute to respond. This will then go back and forth with 1-minute responses, countercharges, and speeches from either side until I determine that it is appropriate to move on to the next question. Panelists from the media will also be given opportunities to redirect or focus their questions. We will repeat this process until approximately 45 minutes have elapsed, and then we will open the floor to questions from the audience. At that time, I will ask that you quietly form 2 lines behind the microphones on either side of the floor. Please be brief and to the point when asking your question. If you're not, I'll remind you to be, and then return to your seat. At the very end of the evening, we will have 2-minute statements summing up from either side. That being said, I thank you again for joining us, and I will now ask Jim Brody to make his opening statement. I'm sorry, it's going to be Mitchell Kurtzman will make the opening statement for the floor side for 2 minutes.
Thank you for not cutting into my time with more of that wild applause. I really appreciate that. I'm Mitchell Kurtzman. I'm the Chairman and Chief Executive Officer of PowerSoft Corporation. We actually moved recently to Concord, Massachusetts. We're probably the fastest growing software company perhaps in the world. We employ about 700 people and are a publicly held company. You might ask why I, as a businessman and as a person who's probably in this year the top 1% of taxpayers in the Commonwealth, would be actively campaigning in favor of the graduated income tax, which will certainly raise my own taxes quite significantly and those of most of my friends. The reason primarily that I'm involved in this is for the fundamental issue of fairness. I have observed over the course of the past couple of decades, as I have achieved a significant level of success in my life, and as I've gotten the financial resources that go along with that, that the past couple of decades have been very good to myself and my colleagues. The rich have gotten richer. That's great. You know, the rich should always get richer. But what's happened is that instead of the great American dream, which is the middle class moving forward, the middle class has been standing still or usually moving backward. And as a result, the gap between the very wealthy and the rest of America is growing. Business Week pointed this out in this cover story, how the inequality of income is hurting the economy of the country. And that reason of fairness is a significant issue. But I would urge you, I believe this is a 2-minute opening statement? Yeah? Okay. I would urge you to consider what you're going to hear tonight in the light of perhaps the environment we're in, which is, I think it's very much like the end of the Cold War. You're going to hear a lot of statements made that might have been appropriate to our political and economic environment a decade ago, 2 or 3 decades ago. But like the Cold War, there are no more communists. Just like the last communists can be found in a theme park in Albania, the last politicians who want to raise taxes can be found in the unemployment lines.
For the other side, we will now hear from Mitchell Kurtzman.
Thank you. I'd be happy to.
Excuse me.
That's the dumbest thing I ever heard.
Now it's time for
I
questions.
can take both sides.
It's all right, Mike.
Okay. For rebuttal, we'll have Mike Widmer.
I've been called a lot of things, but never Mitchell Kurtzman. Good evening. I'm here tonight speaking on behalf of a broad coalition opposing questions 6 and 7. Our coalition includes civic leaders, academics, individual taxpayers, and more than 15,000 small and large businesses who employ more than 1 million Massachusetts citizens. We're opposed to questions 6 and 7 for many reasons, but let me highlight the most important: the economy and the state legislature. First, the economy. Paul Tsongas summarizes our views when he calls questions 6 and 7 economic stupidity and another thunderbolt of anti-business ideology. Massachusetts today is already losing jobs to other states, principally because of the high costs of doing business here. Questions 6 and 7 would make this difficult situation even worse. They are a direct assault on the job producers of our state. For example, they would impose tax rate increases of 50 to 65% on the very small businesses that are responsible for most of our job growth. The most successful group of small businesses would pay the highest tax rate in the nation, 50% higher than our large multinational corporations. Questions 6 and 7 would also impose up to a 65% rate increase on our entrepreneurs and investors whose decisions to create jobs whose decisions either create jobs or not for our people. The 9.8% tax rate in question 7 is higher than in any of the states we compete with except California. These are the very states that are already taking jobs away from Massachusetts because of lower costs and a more receptive climate to job creation. The second major issue is the legislature. Question 6, a permanent, open-ended constitutional amendment, would effectively give the Massachusetts legislature new powers to raise income taxes. And we already have one of the highest personal income tax burdens in the country. The present requirement for uniform rates means that tax increases hit all citizens at once. Under the grad tax system, the legislature can raise revenues one group at a time. By lowering thresholds and creating new brackets, they can do this without even raising rates. Obviously, this is much easier to do politically than raising taxes on our entire population. And given the proponents' track record of pushing for tax increases, this is obviously what this campaign is all about.
I'm afraid that your time is completed.
Okay, I will finish my last 3 paragraphs in a minute.
Our first questioner is Mark Lasesi.
Thanks. This question is for Barbara and Mike. In your opening statement, Mike, you called questions 6 and 7, a direct assault on job producers of our state. 35 of the 42 states that have an income tax, including some states in which business is growing successfully, have a graduated income tax. Do you have any hard evidence, an independent study, economic statistics from another state, say, hard evidence that implementation of a graduated income tax will harm business and job creation in Massachusetts?
Let me put it this way. We're in a position today, Mark, where as a state, as I mentioned in my opening comments, we're losing jobs to other states. We're doing that principally because of the high cost of doing business here, unemployment insurance, workers' comp, health care, and because of our regulatory framework. Not the standards so much, but the regulatory processes. So we are losing jobs, and we're losing a lot of potential jobs that come out of our growing industries because the individuals who are making decisions where to locate are choosing to locate elsewhere. Most recently, we hear that Biogen has decided to move to North Carolina. So we're starting with a playing field tilted against us. We now take questions 6 and 7 when we already have, and I will come back to this later, one thing I didn't mention in the opening, didn't get to, is we already have a progressive income tax system today that is more progressive than most of the graduated tax states. So what we do with question 7 is impose tax rate increases of 65% on small businesses and others who are making the very decisions whether to create jobs here or not. Those job creators, and in a situation where already they are choosing to go elsewhere. It's perfectly clear that in that kind of environment, when we're already losing jobs, that we're going to lose more jobs, the kind of jobs that we want to create in the years ahead.
Would you like to reply?
Yeah, I'd be happy to reply. I guess the answer, Mike, is no, you have no hard data, because we didn't hear any. In fact, all of the evidence indicates that rates of personal income taxation and issues having to do with the personal tax virtually have nothing to do with siting locations and business locations. If you look at all of the corporate headquarters locations that were done recently, and there's how many of them, Jim?
11,700 manufacturing.
There we go, manufacturing sites. 69% of them were cited in states with graduated income tax. It happens that that's about the percentage of the states that have graduated income taxes. What Mike mentioned as high-cost issues in this state, I agree with 100%, and those should be lower. But the reason Massachusetts has a higher income tax than most states is because it has a lower level of other taxes than most states. We have one of the lowest sales taxes of any state. In fact, our overall level of personal taxation is right about in the middle of all the states.
May I have a response too?
Yes.
Yes, I have some hard data. We did a study of all the other states that have graduated income taxes and the 9 states that have a flat income tax and the states that have no income tax at all. And what we found is, for instance, North Carolina has a graduated income tax, but it has built into its constitution a limit on how high the tax rate can go. It can never be more than 10%, and their top rate right now is 7.75%. Arizona allows a graduated income tax, but requires a 2/3 vote of the legislature to raise taxes. Other states require a 2/3 vote of both branches of the legislature and ratification by the voters. Other states with graduated income taxes have built into their constitution other protections. Their question 6, their constitutional amendment, has no protection, no ceiling on how high the tax rates can go, no limit on how often they can be raised, no limit on how many brackets there can be, and no protection for the taxpayers once our constitutional protection, which we now have in the Constitution against a graduated income tax, is removed by questions 6 and 7.
Just a couple of brief things, Jim, if I may. I'm Mitchell Kurtzman as well, by the way. A couple of things.
Aren't we all?
If we did have that cap in the Constitution, would you support the graduated income tax?
We would not, under any circumstances,
Right.
support a
That's what I
graduated income
figured.
tax.
So,
And I want to make that absolutely clear. I hope
And I
there's
want
no
to make it
mistake
absolutely
about this.
clear, too. That's
the
right.
graduated income tax is, as Paul Song has said, another thunderbolt of anti-business ideology, which is the last thing this state needs.
Fine, let me respond.
But I would like to know, why didn't you put some constitutional protection in? Why didn't you put some kind of ceiling? Why didn't you put some kind of rate structure? Why didn't you put indexing for inflation? Why is there nothing in your constitutional amendment?
would you support it if
except-
we did all those things?
No, we wouldn't support
Fine.
any But I'm talking to other people saying, why should anybody support something that has no limit on how high you can raise
Let's
the rates,
talk about what it
how many
does.
tax brackets
Fine.
there can be,
No, I
what
think
the
it-
legislature can do to us.
First of all, you've had between you 4 minutes to respond to the question from Mark about what credible evidence there is that this damaged the economy, and so far we've heard none of it. Let's talk about what this really does. Question 6, the constitutional amendment that's going to mean the end of Western civilization as we know it, says the following: higher income taxpayers shall pay at a higher rate than lower income taxpayers, the definition of graduation. That radical notion is embraced by virtually every Western nation, the federal government, and as was said before, 35 of the 42 states with an income tax. Let's look at question 7. That imposes the rates. My wife often says my personal motto should be borrowed from Alice Longworth Roosevelt, who said, if you don't have anything good to say about anybody, come sit right next to me. In that spirit, let's talk about Bill Weld. Bill Weld did an analysis of the graduated income tax in October of 1993. Here are the conclusions of his Department of Revenue. 92% of the public will pay less under the graduated income tax, funded not by firing cops or taking teachers out of classrooms, but by requiring that the wealthiest 8% of the population pay more, period. When this Department of Revenue group was asked to look at the economic issue, 11 advisors to the Department of Revenue, they decided not to build that issue into the model because their conclusion, their bipartisan conclusion, was that there was no negative impact from a revenue-neutral, moderate change in the income tax to graduation like virtually all of our competitors.
Let me respond to that. Two things. One, the Department of Revenue said specifically that they did not draw any conclusions whatsoever on the economic impact. The proponents for weeks and months now have been saying just the opposite.
What are your conclusions, Mike?
My conclusions, based on the study we did on small business, is that virtually every small business in this state that grows, oh my God, Jim, yes, virtually every small business in this state that is going to grow and create jobs is going to be pushed into higher tax brackets under questions 6 and 7. There is no way that a business can create the working capital necessary without getting above the $50,000 marginal rate and push them into a 50% tax increase.
Jim, if I may.
That's what we're doing to the job creators of this state.
They've mentioned their study twice, if I just may. We put out a study 3 weeks ago that said that 82% of small business owners would pay less under the graduated income tax. The opposition, Michael Widmer, was quoted in the Boston Globe as saying, quote, that is a grossly deceptive conclusion. 2 weeks later, Michael's organization put out a report saying what percentage of small business owners would pay less under the graduated income tax. You know what the percentage was? 82%. It was grossly deceptive when we did it. It was factual when he did. But let me continue. He went on to say, his spokesperson said, 80,000 small business owners will see their taxes go up. As a result, we will lose as many as 80,000 jobs because each of those people will have to fire one worker. When we read further into Mike's report, we realized that after the federal deductibility of that income tax increase, the whopping increase on that 80,000 at the top, the whopping increase is $16 a week. Can anyone argue with a straight face that that's going to cost one job, much less 80,000 jobs? Mm-hmm. And they never, ever, ever talk about the tax cuts for the 400,000 small business owners, nor do they talk about the tax cuts for the 92%, because you believe, Mike, with all due respect, that the only engine of economic growth are the wealthiest people, and the middle class don't invest wisely, they don't create jobs, they do nothing. It's elitist and it's wrong.
Let me take.
I'm going to allow one more round.
Well, yeah,
for each.
there were several distortions
Yes.
I need to correct. The first thing is I never said anything with the number of people was grossly distorted when I talked to the Globe. I was talking about the conclusions that the Citizens for Tax Justice was making. The conclusions were that all of these people were going to get a tax break and this was going to help the economy. You know what our analysis showed? The 250,000 people, they were supposedly small business owners. It turns out they're self-employed or partly self-employed people who are doing some consulting on the side. Their average tax cut, in our analysis, their average tax cut is $43 a year or 83 cents a week. On the other side, the very businesses that are creating the jobs are paying a 50% tax increase. That's what our study showed, and that's what I said was distorted in the Citizens for Tax Justice study. What kind of economic policy, I might add, is it if you undercut the small business sector that's creating virtually every job in this state and give tax relief of 83 cents a week?
Well, I get the feeling we're going to get an answer to that question.
Gee, my little question started all that.
Yeah. I guess my primary response is to feel badly for the voters of Massachusetts who have to listen to this going back and forth and have difficulty figuring out what the truth really is. The fundamental argument on the business side of this is that I don't like the graduated income tax because it's bad for business. That's why I'm against it. It's bad for business. No data to support it. It's bad for business. Why is it bad for business? Well, because I don't like it. Since I don't like it, I will behave in ways that are inimical to the public interest. I will move my company. I will fire employees. I will do less research and development. I'm still waiting to see any data. There's a lot of theories, but there's no data. None.
Whenever the proponents in this argument, whenever the proponents get back in the corner around facts, then comes this kind of rhetoric that pretends that all we're doing is saying, oh, no, we don't like taxes, we're going to move out. That is simply not what we're saying. The tax increases on those small business owners amount to $100 million a year minimum that are going to be paid in taxes instead of reinvested in their businesses and creating jobs in the years ahead.
And the
That's
tax cuts
facts.
for the middle class are $600 million,
No,
which will be
the
spent in
tax-
those very
the
same
tax
small
cuts
businesses.
are 83 cents a week.
Talking about for the population.
No, I'm
Tax
talking
cuts
about
are
for the business
temporary,
people.
which is the whole point here. The tax cuts in question 7 are simply statutory. The constitutional amendment, which is 2 sentences, saying there will be a graduated income tax and the legislature will set the number and range of brackets, that part is permanent.
As it so happens, we will have the opportunity to revisit the question of permanent versus temporary. I think we should move on to the next question, and for that, Vicki Ogden.
Thank you. That actually, it relates to the next question. Poll results in the Boston Globe on Tuesday showed that question 6, which mandates a graduated income tax, may be approved, while question 7, which creates the specific new tax structure, may go down. I'm asking this to Jim and Mitch. Would you support question 6 even if question 7 went down? And what does that do to your promised tax cut for the middle class and the fact that this is supposed to be revenue neutral?
Well, first of all, the promised tax cut is if the 50% plus one of the voters vote for questions 6 and 7. We don't control the vote. We just are 2 voters, just like you are 2 or 3 voters.
Yeah, but would you support 6 without 7? That's the question.
The answer is unequivocally yes, and I'll tell you why.
Okay.
First of all, our position continues to be, despite horrible polls in the Herald, counterintuitive polls in the Globe, is that 6 and 7 will both either pass or will both fail. That's number one. Let's assume your assumption, though, becomes real, that 6 passes and 7 fails. Our position is, at least my position is, our organization's position is, the worst graduated income tax is fairer than the best flat tax, and that's what we'd end up with. Mike talked about how fair our tax system is before. Let me give you a couple of numbers, if I may, which really are the genesis of this thing. Let's look at the total tax system for a moment. Total tax system, you look at the bottom fifth of the population, family of 4, averaging $20,000 a year, they pay twice as much of their income to all state and local taxes and fees as millionaires do in Massachusetts. Middle income family of 4, averaging $53,000 a year, 1.5 times as much. Let's step back and look at the income tax. Mike put out a study saying we have the most progressive income tax in America. Well, that's when one compares people paying no taxes to the wealthy. When you look at that same study from Minnesota, comparing moderate income people to the wealthy, we rank in the bottom quarter. It is hard for me to believe, with all due respect, no, I'm going to answer your question again. Okay, it's hard for me to believe that anybody can defend a system where millionaires pay at the same rate
But
as cab drivers.
isn't question 7 part of the charm of 6 and 7 is 6 and 7 together? Because at least you're saying we know what you're going to be taxed at. We know what rate you're going to be taxed at least for a year. If 6 is approved, but 7 isn't, doesn't that give the legislature whatever full power to create any tax plan and we have no idea what it is?
That's a whole other question, and I hope we'll have additional time. No, it's a whole other question. Okay. The answer is, if it turns out 7 fails, let me be unequivocally direct. If 7 fails, would we have support 6? Absolutely. A graduated system is better than a flat tax system. But what's implicit in your second question is the major topic in this debate, and Mike touched upon it in the beginning, that if the legislature is given this unbridled power to raise taxes, they're going to go crazy. Well, there's an assumption in there that's wrong. The assumption is that the legislature is getting some new powers that it doesn't currently have. Their ad says the legislature will have unlimited power to raise taxes. Is that true? Yes. They also currently have unlimited power to raise taxes. Well, their response will be, yeah, but they'll pick off one bracket at a time. Well, one of their heroes, Tom Finner, in the House Ways and Means chair last year, under the current flat tax system, tried to pick off 26% of the population by raising taxes on renters by $90 million. It was rejected by a 156-0 margin, including Finner himself, because people didn't tolerate the picking off. It's difficult to raise taxes in any environment, but let me finish. The most galling part of this, not coming from you, but coming from theirs. I sat on this same stage with Barbara 4 years ago when CLT had a tax rollback on the ballot, $2 billion a year. Barbara's argument sitting on this stage was, no state has raised taxes more steeply or more often than the state of Massachusetts. Well, that was under the flat tax that Mike and Barbara are now saying 4 years later is the great protection for the voters. It's a fraud, Vicki. Quite simply, that's all it is. It's hard under any system to raise taxes.
I will
like to
now
reply?
answer Vicki's question, which is, Vicki, it doesn't matter whether question 7 passes or not. In the end, the legislature will do whatever it darn well pleases. Question 6 is a constitutional amendment. Question 7 is a statute. We will either have the statute long enough for them to get question 6, the bait in the trap, or we'll not have question 7 at all because people won't vote for it. But in the end, the legislature will do whatever it wants, because all the constitutional amendment says is the legislature will set the number and range of brackets. Now, Jim has said, he just said it a minute ago, so I'm sure you all remember it, that the worst graduated income tax is better than the regular flat rate tax that we have now. I have a copy here of the worst graduated income tax. This is the legislation that was filed by the Senate Ways and Means Chairman in 1976, when the last time the graduated income tax was on the ballot. As you all know, it's been on the ballot 4 times, has been defeated 4 times overwhelmingly by every working class city in Massachusetts and almost every town. But back then, they had legislation ready in case the graduated income tax passed. This one started with a rate at 6% at $18,000, went up every $1,000 went up 1% until it finally got to a top rate of 28%. Every $1,000, when people got a pay raise, when they worked overtime, when they worked 2 jobs, or they just sat there and that inflation pushed them into another high, well, he talked a lot longer than this, pushed them into another tax bracket. Every time they would then raise the rate 8%, 10%, 12%, 14%, 16%, up to 28%, and that's the graduated income tax that Jim Brody says would be better than the 5.95 we have now on everybody.
No one loves reading tax brackets more than I do, but I'm going to ask people to stick to their 1 minute.
Yes, but if he wants to stick to his 2 minutes, why should I stick to my 1 minute?
Barbara, all I can say is that was spoken like the true cold warrior that you are.
Thank you, Mitchell.
Once again,
We're a
you would
mutual
prefer to
admiration
fight
society.
the fights of the past than to fight in the environment that we're in the present. The current legislative environment has no room for tax increases. I was at a meeting of the business community. I spend most of my public policy time with Mike and my colleagues supporting business issues, and I was at such a meeting when one of the leading lobbyists of one of the business groups that's financing the opposition to questions 6 and 7 raised on the legislative agenda for the rump session at the end of this year the possibility of lowering the tax on unemployment compensation or rolling back a scheduled increase because the fund had gotten solvent faster than people thought. And people asked him, what are the chances of passage? And he said, it's virtually guaranteed. There's nothing the legislature likes to do better than cut taxes. This is the same group that's funding heavily question 6 and 7 opposition. The environment is not the environment that you fought so successfully in the past, Barbara, and for which the fight is over. The communists are gone. The enemy is vanquished. There are no more tax increases in the legislature. Let's get fairness into the system.
Let's bring some facts back into the picture. We are talking about amending the Constitution to give the legislature a graduated tax system with new powers. Now, let me put out on the table the radical concept that I first learned back in Milltown in Connecticut in high school in my civics class, and that is that if you are going to pass some kind of legislation that people are going to react negatively to, it's easier to get it passed if you only affect a minority of the group, not everybody. Presently, if you are putting a tax bill through the legislature, you are going to have to do it for 3 million taxpayers. Under the grad tax proposal, to take one example, if you drop the threshold from 50,000 to 45,000, you affect 100,000 taxpayers in this state, including all those above that 45,000 threshold. You ask yourself, is it easier to raise taxes on 100,000 people or on 3 million people?
Well, you know, I'm surprised, Mike, that you raised this point because it reveals either a serious misunderstanding of the way marginal rates work or a willful desire to mislead people. That the way marginal rates work, you can't pick off people one bracket at a time. It's a great soundbite, but the way marginal rates work is that everybody, some portion of everybody's income, including the millionaires, is taxed at the lower rates. So if you create more brackets, if you raise the taxes on those brackets, as Mike said there, it raises the taxes not only on that bracket, but on everybody above it. Therefore, the only bracket that you can really literally pick off without affecting other people are the very wealthiest. And as the federal government has found out, and most people have found out, there aren't enough wealthy people to raise serious money. If you want to raise serious money, you've got to go after the broad middle class. And the broad middle class is where the numbers are. And if you raise the taxes on them, you're raising the tax on the vast majority of taxpayers.
Mitchell, you may understand how marginal rates, and I assure that Michael understand how marginal rates work. You don't understand how the legislature works. You have never sat through an all-night session in the legislature, but I will tell you, since I have, how the legislature works. They come in at 4 o'clock in the morning, they stay all night, at 4 o'clock in the morning, they decide to change tax policy. The press is gone, you're all asleep, ladies and gentlemen, there's nothing you can do, and people like us are sitting there helpless. And then they change the rates, and you're wrong. It says in question 6 that the legislature will set the number and range of brackets. They can choose to raise taxes for people in the $45,000 bracket, as Michael said, and have an offset for people $70,000 that year. The next year they can come back and take away the offset and come back and raise taxes at $35,000.
It would be
the legislature can do any.
unconstitutional.
Excuse me, but you are extremely naive, Mitchell. I'm going to be charitable about this. You are very naive about what politics is all about and how the legislature. To say that the legislature doesn't want to raise taxes, the legislature lives to raise taxes. The only reason they haven't raised taxes in the last 3 years is because Bill Weld would veto it, and they don't have the votes to override his veto.
I think I just.
And let me say, let me add,
Do I assume this
let me
guy is
add,
not with us
Mitchell,
out here?
we still
Can I
have,
respond to this, Michael, if I
we
may,
still
please?
have a part of our minute. Let me just add that, Mitchell,
I'm
the
afraid you're
calculation
out of time.
the calculation that I mentioned, the 100,000 taxpayers includes everybody above. I know exactly how the marginal rate works, and so that still is only 3% of every taxpayer in the
If
state.
I just may, you know, when you're in the middle of these debates and you get involved in minutiae, sometimes you have to remind yourself to step back and say, wait a second. Is this the same graduated income tax system, as I said before, that every Western nation, the federal government, and 35 states already have?
No, it isn't.
Of course it is.
No,
of course it is. Now let's look, since they mentioned number. We looked at this soaking of the rich that they're talking about, raising top rates. In fact, here are the numbers. In the flat tax states, which provide the great protection, 80% of those states have raised their rates in the last 8 years. In graduated tax states, in terms of top rates, 49% have cut top rates, only 17% have caused them to go up. Now, if we were disingenuous, we would say that proves that taxes will always go down in the future. We're not saying that. What we're saying is the system is completely irrelevant. Graduated or flat, taxes will go up sometimes, taxes will go down sometimes. In 1989, they went up, income taxes, Barbara screamed. In 1990, they went up, Barbara screamed. In 1991, they went up, and Barbara screamed every single time. It was under that great flat tax system that protects taxpayers so well.
Jim, can I go back to my original question,
Yes.
though? Because I think in terms of pushing this package, 6 and 7 were pushed as a team. And the soundbite in this is vote yourself a tax break.
Correct.
That's the soundbite. If 6 is passed and 7 is not, you have not voted yourself a tax break. So how can you say you support 6?
Because Vicki,
Because, I mean, that's what I think,
just briefly-
because people are really confused, and what they're hearing is vote yourself a tax break. But if 6 goes and 7 doesn't, there is no tax break. There is whatever happens.
But
that's my
in
question.
both your questions, Vicki, the inference is, Jim, if you decide to pass question 6 and the voters decide to reject question 7, what happens? I'm one vote on both these things. If the voters choose to adopt a fair tax system, wait, let me finish the thought.
Right, but you're the person behind the promotion. The vote yourself a tax break
Right, and
implies
voters,
6
but
and
Vicki,
7.
voters are grown-ups who are free to do whatever they choose, reject them both, accept one, or, I mean,
I'm that's to our side. I don't quite understand. I mean, the question is, are we still telling people that they should vote for both? Absolutely. We spent a great deal of effort on both. All of our message says, vote for question 6 and question 7, vote yourself a tax break. The answer is, now then, if the voters pass question 6 and defeat question 7, will we then not follow the Constitution and not work to get a graduated income tax? I think we've done a heck of a lot of work that will be very valuable to the legislature, and my guess is we'd go right up and take the same bill that's question 7 and suggest this is the appropriate tax rate. We spent a lot of time and effort on it. So far, the Weld Administration Department of Revenue Analysis has characterized it as we have, revenue neutral. They've characterized the number of taxpayers that will get a tax break the same as we have. We think that's a great starting point. So if question 6 passes and question 7 doesn't, I think we'll come right back with question 7 and urge the legislature to pass that.
And speaking of the 2 questions, I think it's time for another question.
All right, thank you. The Department of Revenue analysis that Mitch just mentioned was done last year. One of the things that Department of Revenue study determined is that if questions 6 and 7 are approved, approximately $600 million in tax savings will enter the state's economy, will go back to consumers who, being middle-income people, will likely spend it in the state. I don't understand how that, a $600 million infusion into the state's businesses isn't good for business, for the economy, and for job creation.
Mark, that's not what the Department of Revenue said. I'm sorry. The Department of Revenue said that there would be a transfer of $600 million from one group of taxpayers to another group of taxpayers. Speaking of these great studies that we hear about or want to hear about, there is no study anywhere that says that that transfer of $600 million from one group to another is going to do anything to stimulate our economy, because it's only going to be a transfer. If it even managed to have any additional spending, the spending is not going to do anything permanently for the Massachusetts economy, since the only way you're going to grow this economy is to build industries in which we export to other states. And clearly, the kind of consumer spending we're talking about, buying cars, refrigerators, whatever, none of them are manufactured here. The only way to build our economy, and the reason that Paul Tsongas, Tom Finneran, Bill Well, Joe Malone, and virtually every editorial board in the state of every major daily newspaper has come out against questions 6 and 7, is that they understand that in order to build this economy, you have to build the growth industries. And these questions undercut the very growth industries on which our future economy and our future education and social programs depend.
A couple of things. Paul Tsongas has been mentioned repeatedly. I think one of the highlights of the campaign was the debate at the Boston Herald between Paul Tsongas and Mitchell Kurtzman. And the reason it was a particularly wonderful moment is because Mitchell Kurtzman introduced Paul Tsongas at the kickoff of his presidential campaign a couple of years ago. In a wonderful moment, Paul turns to Mitchell and says, Mitchell, you and I know that the second the graduated income tax passes, the second it passes, we know executives who are ready to move their companies immediately to North Carolina. There was a pause. Mitchell turned toward Paul and said, Paul, North Carolina has a graduated income tax. The reality is it's once again this notion, we say it's bad for business, it is. In terms of the $600 million, Mike, there was a guy who's now Secretary of Labor who used to be a lowly Harvard professor who once said, Robert Reich, the wealthy invest wherever in the world they can get the best deal. Taiwan, the Silicon Valley, Mexico. When $600 million is put in the pockets of the middle class, Mike, they will spend, as Bill Weld said, they will spend it quickly and locally, helping the same small businesses that you were so concerned about a minute ago. You said the $600 million spent in state doesn't do anything for us because they're not our growth industries. Well, 2-3 minutes ago, you said how important it was to foster the growth of small businesses where those customers, where those middle class customers will be spending their money.
Excuse me, but this is from the same gentleman who took the $600 million out of the middle class tax pockets in the first place. I mean, team, you have to understand, is made up of the public employee union leaders, the human service advocates, and the people who have always supported tax increases. They supported the income tax increase from 5% to 5.75% to 6.25%. When we tried to put that money back into the pockets of the working class and middle class people, they objected to it. For them not to express concern about how wonderful it would be to have $600 million in the pockets of working class people, we say, do it now. We filed this same legislation that they have in question 7. We filed it this year with the legislature and showed up to testify in favor of tax cuts for senior citizens, low-income working people, working mothers, and water and sewer ratepayers, and they showed up and said that this would just be throwing money away.
Well, believe it or not, I should say, this may shock some of you, I did say it's throwing money away. And ironically, the senior citizen groups, the middle-income groups, the groups representing workers all testified against those tax breaks. Because in the world, according to our opponents, the way one funds tax relief is by reducing public services. That was the notion behind Question 3 in 1990. The reason we opposed these tax breaks in the legislature and would oppose them again is because they're funded by cutting the services that these very same families depend upon. We have a funding mechanism which is described as asking the wealthiest 8% of the population to pay a little bit more and at the same time bringing our tax policy into the mainstream. The irony that I find is I oppose tax breaks that these two gentlemen supported on the business front, 3 of them over the last couple of years. The argument for every single one was we need to move business tax policy into the mainstream where our competitors are. Well, now that we want to move income tax policy into the mainstream where our competitors are, once again, it's the end of Western civilization if it happens. If you argue mainstream tax policy when you want it, Mike, you've got to accept it when the income tax is it.
Let's talk about North Carolina. North Carolina, why is business moving to North Carolina? First, because of the cost of doing business. We did a study a year ago that showed North Carolina is in the bottom group of states in terms of the cost of doing business, unemployment, health insurance, workers' comp. Where's Massachusetts? We're right at the top. So people are already gravitating there. Then let's look at the tax structure in North Carolina. And we say, oh, that's a grad tax state, quote unquote, right? Then we look at it and we find out that above the $12,000 income level, which is about where we have no taxes at all in this state, what happens? There are only two rates, 7 and 7.75%. So it's virtually a flat tax state, it turns out. Now let me tell you a story. I'm driving home in the car the other night after debating Laura Barrett, one of Jim Browdy's colleagues, and Mark Roosevelt is on WBUR. And Mark is giving this, going, well, business is going to North Carolina. North Carolina is a grad tax state. Therefore, hey, okay, grad tax. So then a moment later, a caller from Georgia. And he said, Mr. Roosevelt, I just want to let you know, I've just moved up from Georgia. He said, and Georgia has a grad tax state. He said, but there's a problem. The highest rate in Georgia is 6%. And this proposal in question 6 and 7 is going to go up to 9.8%. Mark Roosevelt says,
I'm afraid that,
well, I have to say, Mark said, I have been troubled by how high that rate is. To coin a phrase, it's the rate, stupid.
Jim, one answer if you want.
Well, by the fact then that we have one of the very lowest sales taxes, Mike, in the country, then that says that businesses should be flocking in here. If personal levels of taxation really affect people's business location decisions, they should be flocking to Massachusetts because we have one of the lowest sales tax in the country. But in fact, they're not. And what that reveals is that personal taxes are not the issue in business location. All the costs you mentioned are the issue. And we're working together, as you know, to reduce those costs. Why don't we work on reducing those costs together? The issue here should be separated from the debate over the size of government. We can have a good debate. I would probably vote for a lot of reductions in the size of our state governments. But once we've decided how big our state government should be, then the question is, how do we go about getting the funds to finance it? And all I propose is that we do it in an equitable way. That's question 6 and 7. When we decide how big the state needs to be, we'll raise the money equitably.
Mitchell, it's simply not accurate. I got to reply to the one inaccuracy.
If you could do so quickly.
It's simply not accurate to say that personal income taxes have no impact on business siting decisions. I worked at a major corporation for 10 years. I was involved in business siting decisions around this country. And a whole collection of factors come in, including the cost of doing business, and that's the only thing you and I seem to agree on. But in addition, clearly the tax structure has an impact. And when we have all the disadvantages we have today, and you impose on that the highest income taxes in the nation on small business, and you're going to tell me that doesn't have an impact? Please, Mitchell.
You know, there's a very important issue. I know, Jim, you want to stop, but you're creating that climate with all due respect, Mike.
Oh, please,
Mike, there was a wonderful piece in the Boston Globe that Alex Beam wrote before he sort of lost his marbles or whatever. But Alex Beam wrote a wonderful piece in the business section in 1989 where he interviewed an ad hoc group of high-tech executives who were meeting and saying, why is it that our colleagues across the country think this is such a rotten place to do business when we think it's actually a pretty decent place to do business? And the conclusion they reached, with all due respect to Howard Foley sitting in the back of the room, is the High-Tech Council had done such a wonderful job of bad-mouthing the business climate in Massachusetts that it became a self-fulfilling prophecy. You wanted a research and development credit, you got it. You wanted a tripling of the investment tax credit, you got it. You wanted the repeal of the estate tax, you got it. You can't continue to say if anything that some of your business colleagues don't like happens, that the end of the business climate occurs, because it may happen purely because you continue to say it.
This issue was raised with Paul Tsongas. He was asked this question at the press conference that we held where he and Governor Weld and John Silber and Malone and Cellucci all joined together, and hardly like-minded individuals all joined together to oppose questions 6 and 7. Somebody asked this very question of Paul Tsongas, and he looked baffled. He said, this is a little bit like telling somebody who's just gone into a hospital because he's got cancer or some other problem, well, just don't talk about it and the problem will go away. Thanks.
Well, on that uplifting note, I think we should have one more question from our panelists. Vicki Ogden.
This is to Barbara and Mike. If your campaign is so concerned about Massachusetts business, why have you spent nearly $1 million in campaign funds on a Los Angeles political consulting firm to handle strategy and create advertising?
We didn't. They did, so they cannot answer the question.
When this campaign began, we interviewed 10 campaign consulting firms. And out of that, we then had a second round of interviews of 6 firms of the 10, including 4 locally. We made a decision. We wanted to hire a local firm, but we made a decision to go with the best. These are the best ballot question consulting firm in the country in our estimation, and we did that because there's a lot at stake. It's very important for the economy of this state that we win this question, that the voters vote no and understand exactly what this is about. So we went with the best, and we're not ashamed about that.
And we didn't have anybody, obviously, of that caliber in Massachusetts. We should talk.
No one who has had anything like that experience. They've been involved in something like 80 ballot question campaigns in Massachusetts. The most experienced people were in 3 or 4.
Well, let's also, I think what's relevant to this discussion is not just the $1 million that's been shipped out to California to protect jobs in Massachusetts, but also where the funding is coming from. The opposition has so far raised close to $3 million, 94% of which comes from major corporations, even though this will not raise corporate taxes by 1 nickel. So why are they doing it? Well, we hear the heads of major corporations saying they're very concerned about the ma and pa grocery stores in downtown Cambridge. They're very concerned about small businesses in Saugus. Let's look at one person who we've been criticized for criticizing, but I think that's the nature of the beast. Robert Palmer is the head of Digital Equipment Corporation. Fired 20,000 workers last year, 20,000 workers this year. His corporation lost $2 billion last year. In the middle of all that, he got a 20% pay raise to a combined compensation package of $10.1 million. Because of those losses, we learned in the Globe a couple of weeks ago, Bob Palmer was unable to have Digital contribute to the United Way. But Bob Palmer thought it was okay to contribute 50,000 corporate dollars, Mike, to the campaign against the graduated income tax. Now, in light of the fact, just briefly, Jim, if I may, in light of the fact that virtually every one of his current and former employees would benefit from this plan, in light of the fact that the only thing that Bob Palmer could come up with is what your California firm came up with for him, that was going to hurt small businesses, which I'm sure Bob Palmer is deeply concerned about, what conclusion can one reach other than the fact that the only reason the Bob Palmers of the world are spending $3 million, $1 million of which has gone to California, is because they don't really care about the corporate bottom line, but about their own personal bottom line.
Mark Lasseter.
Excuse me if I may.
No,
I didn't have a chance
no, you
to
may
get
not.
my-
Follow up here. Let me take a follow-up here. As long as we're talking about campaign finance, the question I think needs to be asked, Jim, is that more than 3/4 of your campaign's money has come from public employee unions.
81%.
Okay. And including the 2 largest public employee unions in the state, AFSCME and the Massachusetts Teachers Association. What does that say about your campaign and this proposal?
It says that virtually every one of their members is going to get a tax break. And that's number one. Mark, first of all, virtually every one of those decisions was made democratically. Unlike when a corporation like 9X or Digital or Raytheon says, I'm going to contribute $50,000 and doesn't talk to its shareholders or its employees, here there were Democratic votes, number one. And number two, as you know, under Supreme Court law, if any individual union member wants to opt out, he or she may opt out of that contribution. Furthermore, the primary reason the public employee unions and the people they don't mention, the Mass Council of Churches, AARP, Mass Senior Action, the League of Women Voters support this, is twofold. Not just because fairness is an end unto itself, which we believe it is, but you know that great line from Lily Tomlin, no matter how cynical I get, I just can't keep up? Well, that's what politics is like in Massachusetts these days. The relationship between the governed and those who govern is abysmal. John Olver hired me in 1987, he's now a congressperson, and said, what you will learn, Jim, is people's support for what tax dollars do is directly connected to how fairly they believe those tax dollars is raised. So we believe the benefit, including the public employee unions believe the benefit, is not just fairness and tax relief for their families, but if we can deliver tax relief through the voters themselves, we begin to rehabilitate this relationship between the people who are governed and those who elect office.
Excuse me, but as the organization that first started to rehabilitate this relationship, when we did Proposition 2.5 in 1980, at a time when the relationship was just about non-existent, nevertheless, we did do Proposition 2.5. We have never seen a tax cut that we didn't like, and that's why it's obvious that this is not a real tax cut or we'd be supporting it. But all of those organizations you just mentioned, the League of Women Voters, the AARP leadership, by the way, that is not the membership, the AARP leadership, if you can believe it, was opposed to Proposition 2.5, which had 92% of all the seniors in the state voting for it. All these organizations were opposed to us on Proposition 2.5. And back then, we were pretty much alone, except for our friends in the High Technology Council. Thank God this year we have some help. This time, the business community has been willing to step up and help us fight back. We have an average membership fee of $27, what our average membership pays to our organization. We're a small grassroots organization, usually have 3 employees, added 2 more people for this campaign. That's who we are. We were formed to fight the graduated income tax in 1976, and we defeated it 73 to 27% of the vote. But this time we had the power of the public employee union leaders against us, and this time we needed help. And all I want to say right now, if he's listening, is thank you, Bob Palmer. I don't care what your reasoning was, but you have saved us, the taxpayers of Massachusetts, and your employees from the tax trap, and we appreciate it.
We can have one more round.
What this leads me to is to, I think, mourn what is the end result, Barbara, of your efforts over the years, which is in the short term, I think they did help us to get a handle on some problems in the state, but in the long term, it's helped to fundamentally undermine the sense of community, commonwealth, and common good here. It has resulted in the factions in the community fighting against each other, that elders who don't have children in the school fight against school budget increases and 4 other things. It's set the community against each other in an era of limited resources. The graduated income tax is designed to recognize that we have a common good and a common wealth. Those of us who are fortunate enough to be able to afford it have an obligation, a responsibility, and a privilege based on our success.
Then pay it, Mitchell. Write a check to the government right now for whatever you think is your fair share, but leave me and my members alone.
And please, Mitchell, spare me. You guys, you put this on the ballot. You ran those ads against Bob Palmer, the ads that apparently even your supporters have disowned, and have clearly created a class warfare mentality in this state. And you run those ads, and you put this on the ballot, and then you have the temerity to get on your high horse and talk about education. What is going to help education in this state, Mitchell? It's jobs. It's jobs, and the only way we're going to get jobs is if we defeat questions 6 and 7 and get on with a cooperation in this state in order to produce the revenues that can support our social
That's
and
one of the most
educational
important lines. No, it's one of the most important lines in this campaign. The only way we can get on with jobs is if we defeat questions 6 and 7.
Precisely.
What do the two have to do with one another, Mike? You talk about...
We have just been discussing this for the last hour,
Mike, we
Jim.
talk about class warfare. You've used that expression.
Yes.
I knew it would take 45 minutes to get to it.
Well, you were the one who ran the ad, not me.
Let's talk about what exists now. Business Week in this article cited the Census Bureau, which has been looking at income distribution since 1947. Do you know what year since 1947 we experienced the largest gap between rich and poor in America? Do you know what year that is? 1994 as we sit here. That's class warfare, Mike. What we are trying to do is undo the colossal gap that exists between rich and poor, create a little bit of fairness, and create a feeling, as Mitchell says, that it's a joint responsibility to pay for the government services that all of us
Jim
depend
Browdy,
upon.
who are the people? What class suffers if we don't have the jobs? Not the higher class, not the wealthy. It's the lower and middle income people of this state who suffer if we don't have
Mike,
jobs.
let me ask you one-
And if we don't have jobs and we can't have the revenues
You're right.
coming into the state system,
You're right.
how are we going to fund our
Mike,
education
and
programs?
I assume that's why, by the way, since the grad tax is so bad for jobs, that you can cite for us all 35 states, if I may, Mike.
Thank you.
Why don't you tell us?
About to go over the edge.
It's okay. If you can just tell us briefly, since it's so horrible for
Power of
jobs.
your argument.
In the 35 other states that have a graduated income tax and this economy-killing graduated income tax, why don't you describe to people the efforts by your fellow business leaders to get away from the graduated income tax and move to a flat tax? Colorado, Arizona, how about the other 33? Is there one, wait a
let's
second.
talk about
Is there
the other
one
states.
single effort to eliminate a
Could I
graduated
talk-
income
can I answer
tax?
quick? Let's talk
Absolutely.
about the other states. The so-called other graduate income tax states. You want to know what our
So-called.
future? You want to know what? Yes, because we are a graduated income tax state. We have a progressive system today, more progressive than most of those states. Now, you want to know what the future beholds? What do you think the top tax rate is for about half of the grad tax states? The top rate at which the income at which the top rate kicks in. $20,000 is where you begin to pay the top rate in those states. Let's take our neighboring New York. In 1960, the top rate kicked in at $15,000. What would that be equivalent to today? $71,000. What's the top rate kick in at now? $13,000. That's
Mike,
the
what is
future
the top
of the
rate?
graduate.
What is the top rate kick in at Massachusetts at $8,000? Because a millionaire and a poor person pays at the exact same rate, so the poorest people in this state pay at the same rate that Mitchell Kurtzman
That
and
is
you
simply
do.
not true. That is not true. The Department of Revenue study that you love to quote, Jim, all around the state, hey, Department of Revenue, what does it say? It says that the bottom group of taxpayers, the bottom 20%, pay 1.3% on average of their income in state taxes, What do the top 20% pay?
Mike.
5.8%,
Mike.
a 4.5 times greater than the bottom.
Mike, I
than the
made
bottom 20%.
$55,000 last year. I made $55,000 last year. I paid at 5.95. Mitchell made probably about 100 times that much. He pays at 5.95.
No, Jim, you missed
Is
the
that
point.
equitable?
Jim, you missed the point. It's how much you pay when you write out the check, and you haven't accounted for the major parts of our tax system that make it progressive. Deductions, exemptions of one sort or another that make it very progressive, especially at the lower end, and those are the people that we're most concerned about. So they pay, on average, 1.3%. The top group pays 5.8%. And I might point out that in the state of Massachusetts, the deductions that you get in federal government and the other states for mortgage interest, charitable contributions, property taxes, you don't get them here. So therefore, a much higher percentage of the income of the wealthy in this state is taxed.
Okay.
And that's why we have a progressive system in this state today.
Well, I knew we would get back to a discussion of specific tax brackets. Hard though it is to believe, it's possible that some members of our audience still have questions remaining about questions 6 and 7. And so at this point, what we'd like to do is ask people to line up quietly behind the microphones and to ask questions. I'm absolutely going to insist that these be questions and not statements. And so if you can ask a question in about 10 or 15 seconds, that would be just terrific. And we will start with the gentleman on my left.
Hi, my name is David Yarkin, and I'd like to say that I think you can tell a lot about an idea by who's against it. And to Ms. Anderson, I'd like to help you in you're trying to rewrite history about Proposition 2.5. I want to know, my question for you is, what would you say to my parents, who are both public school teachers, have been for 20 years, both have graduate degrees, yet are earning very, very small salaries because things like Proposition 2.5 have kept their salaries so low because they've cut the amount of money we can spend on important things like public education.
I don't know, David, what would you say to all the people, all the senior citizens who before Proposition 2.5 were paying property taxes that were 81% above the national average and nobody cared about them? We cared about them. We went to the people, and the people voted 60-40 for Proposition 2.5 because they felt that was the best thing for senior citizens and for the economy, and it is our proudest achievement. Thank you.
Gentleman to my right.
Jim Browdy, I sat in some debates last year, or 4 years ago, on question 3, where you stated tax relief was needed, but it goes too far. Then you turned around that same year, although you said you wouldn't, and pushed for more taxes. Is that why you set no limits on this proposal?
Well, everything was factually accurate up to a point. Specifically, after saying during the campaign, and I'll even make it better for you, saying during the campaign that we would not have supported a tax increase in the following year if question 3 was defeated, we supported an $800.
You also said they should go down. They've gone too far.
Finish. We supported an $850 million tax increase that May, and you might want to know why. Because after the voters, by that same 60-40 margin, voted to protect those $2 billion in taxes, the legislature, in a bipartisan love fest with our governor, proceeded to repeal every single one of the taxes that the voters had said they wanted to protect. So what we were doing in May is going back and saying to the legislature and our governor, you should honor the mandate of the people from November. Asking that those taxes be restored was purely trying to enforce the voters' will from 6 months earlier.
On my left.
Mr. Widmer, you have a tremendous spot on television, this one with Mr. Rita from New Bedford, which I found terribly interesting. There's one thing I miss out of it, though. What is his tax bracket now, and what is his income, and what have been his taxes before, and what will he pay future for taxes?
He asked us not to divulge that. So
Would you please explain why, since you're using him?
He is concerned about the legislative powers that this would give the legislature under question 6. That is his message on television, his principal message. The
Some of your
tax
other
trap.
friends here might
He is
Thank you.
concerned,
That's-
regardless of whether his taxes are raised or lowered under question 6 and 7. His message is a message that we want the people of this Commonwealth to hear.
I do
And that
too,
is-
but I just want to know what his
That's
taxes
all that we
are,
need
which
from you. Thanks.
If I just may on this
No,
point-
let me
no, you may
finish.
not.
Oh, no.
I was asked a question. Let me finish, please.
You haven't answered it yet. I asked for his taxes, and you tell me you
Sir,
can't
we're
test
really, that's really quite enough, thanks.
Well, all right. Can somebody else give me the information?
The message of that ad is the message of this campaign, the central message, one of the two central messages, and that is that question 6 is a constitutional amendment, a permanent change in the Constitution, open-ended, requiring a graduated income tax. which in effect politically will give the legislature new powers to raise taxes on everybody. That is what Mr. Rita is concerned about, and that's what in the poll of all the small business people that the Herald did a week ago, and in which a large percent of the people who would get a tax cut under question 6 and 7 still spoke out against it because they were concerned about question 6 and the powers it would give
Jim,
the
if I
legislature.
may, there's a very important point here. I'm sorry. In the commercial that we were talking about, John Reed is a lobster fisherman. It says New Bedford Seafood Company in the commercial. In fact, the New Bedford Seafood Company is an oil and gas distributing firm, not a lobster company in New Bedford. Michael just said whether his taxes go up or down is not relevant. Well, in the commercial, Mr. Rita says, my taxes will go up 65%. If for his taxes to go up 65%, Michael, he would have to earn with his family at least $150,000. When the Globe tried to find him for 9 days, he refused to return their phone call. When your campaign was asked to document the fact that his taxes would go up, not up or down, 65%, your campaign said incredulously, we never asked him what he paid. He has privacy rights. We didn't invade him.
He does not say that his taxes will go up 65%.
I'm going to read it to you right now. I'm going to read it to you right now.
He's talking about the rate.
I'll read you your own commercial.
We can,
pretty significant.
I'm sure most of us will see the commercial in the next week or so. Perhaps we can move on to the next question. The gentleman on my right.
Yes, my name is Peter Everett. I'm the Libertarian candidate for Secretary of State. My question is directed to Mr. Browdy.
Yes.
I kind of like the language of the second and third sentence in Article 44 of the amendments to the Constitution that say that if you raise my neighbor's taxes, you have to raise my taxes. If you cut my taxes, you have to cut my neighbor's taxes, and we're all in this together. Our society is already so divided along class lines, along race lines. These divisions seem to be getting worse. Why do we need bracketed rates so that our society will be further divided with different income groups politically fighting each other over who gets the rates? I like the flat rate where it creates a spirit that we're all in this state together. We're all working together. Everyone's rates go up if things are doing badly. Everyone's rates go down when things are going well.
Well, that's a good question, but with all due respect, if you're going to be Secretary of State, you should understand the tax system a little bit better. Under the current law, sir, under the current flat tax...
I understand it very well.
Under the current flat tax system where you're saying we can't divide people, I assume you know that if we decided to raise the unearned income bracket from 12 to 13%, we'd affect 21% of the population. If we attempted to eliminate the renter's deduction like Thomas Finneran tried to do, we'd affect only 26% of the population. If we attempted to end the dependent exemption, we do the same. The bottom line is while the opportunities will exist with brackets under a grad tax, the opportunities exist now to get rid of deductions, exemptions, and change them. So the only difference, sir, if 6 and 7 pass, is not the opportunity to pick off taxpayers, but a mandate on the legislature, a mandate when they raise taxes or cut them from the Constitution to take into account the financial straits, the pocketbook issues of the middle class. It says, higher income taxpayers shall pay at a higher rate than lower income taxpayers, which ensures fairness in the future.
That doesn't address the question of the political division among...
I just explained to you, you can divide it right now, sir.
Okay, on the left.
My name is Paul Collier. I rehab old houses. First of all, I just wanted to make a comment on Mr. Browdy. When Barbara was fighting all those taxes, we all gasped, not just her. We all gasped, not just her, when she was trying to defeat those taxes. I'm 32 years old, and I'm starting to creep into that $50,000 tax bracket, and I work pretty hard, and I can see my rate's going to increase quite a bit. I think Mr. Kurtzman here is a little disingenuous when he says that only the top 2% or whatever it is that's going to be have their taxes increased. It's going to hurt me severely. It's also going to hurt my business, and I'm self-employed, and I only employ one person. That's myself. My biggest question, because I'm a property owner and I'm a taxpayer, and I'm going to direct this to Mr. Widmer because it's in one of his little newsletters here that I have, and it's in regards to question 6, and one of the things is if this is passed, is it going to give the local communities the right to raise our taxes, to raise our water taxes, and to raise everything else that I'm paying daily, and I'm paying water taxes on the properties I own where I live. I'm going to be paying another income tax if what you say is true. And what I'd like you to do is just tell me, besides my income tax going to go up, are there other taxes that are going to be hit with this? Because it seems every time the legislature does raise your taxes, other taxes are hit with that you don't know about. And then I'd like you to respond if what he says is incorrect. And that's pretty much it. And I also want to thank you people for coming here because pretty much I've been able to form an opinion tonight, which I wasn't after tonight.
The present Constitution requires that taxes be uniform throughout the state, and that means it's unconstitutional to have a local income tax, whether it's a payroll tax or a tax on residents of the city or town. That sentence is being removed, would be removed under question 6. So for the first time, it would make it constitutional for the legislature to pass an enabling statute and then for a city or town to pass a local option income tax, either on its residents or on people moving, like the city of Boston, people, commuters who come into town and work there. Now, the opponents will say in a second that, no, that's not accurate. Their reading of it is it's still unconstitutional. And we simply don't agree. We think it is, in fact, it would be constitutional if question 6 passed to have a local income tax. But even if there is disagreement about this, the important point to take away is that that disagreement will end up in the courts. And that means that there will come a time where the court is going to rule whether, in fact, a local income tax is constitutional or not. No court needs to rule today. It's unconstitutional. It's prohibited today. Question 6 would raise that issue for the first time.
I'll let Jim respond from the specifics of your question on your personal taxes. I'm far from disingenuous. The Department of Revenue says 92% of taxpayers will get a tax reduction here. That's the thought. The top 8% will pay more, and that's it. However, this issue of local income taxes is Mike's domino theory, like the old Cold Warriors, which is you give up on one communist country, all the other countries are going to fall. If you have a graduated income tax, pretty soon the barbarians will be at the gate asking for all of your other taxes. In fact, there's no municipality, no city or town, no local government that has ever asked for a local option income tax. None of them has stepped up to the plate to say so. The Commonwealth has had the ability, the cities and towns, ever since we have been a Commonwealth, to pass local option payroll taxes, and they have never availed themselves of that opportunity. This is a red herring. It's as red as the reddest herring that there is. It's a diversion, it's a scare tactic, and it's a shame that you need to use these things to scare people in Massachusetts to scare them with millions of dollars of spending and misrepresentation.
We're not trying to scare you. We're
wrong.
trying to terrify you because you're simply wrong, Mitchell. It just shows your lack of understanding. The reason the cities and towns haven't asked for a local income tax is the Constitution says clearly they can't have one. What's the point of asking if the answer is going to be absolutely not? If question 6 passes, the answer, in my opinion and the opinion of our legal experts, is absolutely yes. But Michael could be right. It could end up in the courts. At that point, we don't know what the answer is. Let's not take a chance on it.
Okay. On the right.
The first half is, if business is so big on creating jobs, why have they been, so many of them, been so keen on laying people off, on downsizing, in the name of not cooperation, but this thing called competitiveness? Why the GM plant closes in Massachusetts, they open one in Mexico? The second half is, why isn't, if we're going to get into the economics of this, $300 or $200 or $500 in my pocket that I'm going to go out and spend good or better for business than more money in Mr. Palmer's or whoever else's pocket?
I believe that's a question directed over here.
Okay. The first part of the question, the world economic situation today, we all know, is incredibly competitive. And the kind of luxury that businesses in this state or any state had 20, 30 years ago to employ people and not worry about costs and overhead simply don't exist anymore, because we're in a very, very worldwide competitive situation. That's why, and the one item that Mitchell and I do agree on, the cost of doing business, that's why it's a critical issue for this state to get those costs down. And that's the disadvantage that we already face, and that's why we are losing jobs today to the likes of all the other states, North Carolina, Michigan, Illinois, and Texas and Florida, because of the disadvantages we have here today. Now, how do we turn that around? If we were following a positive economic policy, what we would do is have a tax structure. We would deal with the cost, but we would also have a tax structure that helped small businesses that are some portion of which are going to be the future major employers in this state. And we would have a tax system so that as they added people and got a little more working capital and wanted to invest that into their business and then expand, they would actually, instead of being penalized, there would be some inducement to do that. You have a situation on questions 6 and 7 where as they grow, it's impossible for them not to move into the higher tax bracket. So you've designed an economic policy to undercut your very job creators. That's the problem with question 6 and 7.
Yep, you're right. As you get wealthy, it's impossible to avoid paying more
This
taxes.
is working capital. These are small businesses. This is not wealthy.
This isn't working capital. This
This
is the
is working
personal
capital.
income of subchapter S corporations.
Yes, and that
Let me
is
say, Mike,
working
that
capital, Mitchell. If you understand
ba-
how tax systems work,
Mike,
working capital.
Mike, I run a business.
I understand that, but I am telling you how the tax system works. And everybody who runs a small business, you're a C corporation in any case.
And I wasn't born as a big business.
Right. And working capital, Mitchell, is the key ingredient. And what happens at the end of the year? What are you taxed on at the end of the year?
Mike, I understand.
Not on the salary alone. You know that, Mitchell, and I know that. And
Mike, I understand it very well, and that's one of the reasons that I was responsible for inserting in question 7 a significant tax incentive for entrepreneurs.
Oh,
such
please,
that
Mitchell,
people start
I was
businesses-
hoping you would stop. I was hoping you
such that
wouldn't
if
come to
people
this
start
point.
businesses in Massachusetts, that if they do what I did and start their businesses, do what I did, by the way, prospectively, because unlike what your campaign is saying, I get no personal tax break out of this, that if they start
campaign
businesses
is
in
not
Massachusetts,
saying that, Mitchell.
and if they are successful in their businesses, as I have been, and they stay with their businesses for 3, 5, or 7 years, they will get a 70% tax break on the capital gains associated with the ownership of their stock.
Mitchell, everybody who has looked at that, from accountants to venture capitalists to everybody in this state who deals with building businesses, has called it a fraud.
But I still haven't heard an answer to why extra spending money in the pockets of large numbers of people isn't going to be good for the economy, isn't going to be good for business.
Of course it's good for business, it's good for everybody, that's why we support it. We would put more money into the hands of the taxpayers right now. We filed the legislation to do it, team showed up at the hearing and said that it was throwing money away. But you're right, it would be very, very good to put more money into the hands of the working people, as long as you didn't take it away from the people who are creating the jobs of the working people.
Okay, on the left.
Mr. Kurtzman.
Yes.
If questions 6 and 7 do not pass, and if you are so concerned with fairness, have you considered giving your employees a raise or a subsequent lowering of the price of your products?
I believe that if you talk to the employees of PowerSoft, you will find that they are among the best compensated people in the Commonwealth at every levels of the organization.
Doesn't that money come out of the pockets of the people who buy your products, and couldn't they better put that to use, spending it somewhere else?
I think you're confusing tax policy with competitiveness here.
I don't think it's confusing taking money out of one person's pocket and putting it into someone else's pocket. I think that's what the whole issue was here tonight.
I'll decline to pursue this question.
That's fine. On the right.
Question about impact on businesses. As I understand it, DEC will not pay $1 more as a result of the graduated income tax than they did before. The CEO of DEC may pay more. So the question is, I can understand why rich people wouldn't want to live in Massachusetts, but why would rich corporations not want to be headquartered in Massachusetts? And as I understand it, most small business owners don't make millions and millions of dollars. Why would they care?
Excuse me, why would they? Help me with that last question.
If you're the owner of a small business
Right.
and you make $40,000 a year,
Right.
why would you want to move out of Massachusetts because of the graduated income tax?
The issue isn't just moving in or out of Massachusetts. The question is, this gets back to what Mitchell and I were disagreeing on a moment ago. At the end of the year, if you're a small business person, the so-called subchapter S corporation, you pay a personal income tax based on your earnings at the end of the year. What classically happens is you take what's called a draw, or a small part of that, for a salary, and you tend to live on as small a part of that as you can in order to take what remains and invest that back in the business. And that's the only way any small business can grow. Since small businesses create virtually all the new jobs in this state and most of the states in the nation, what a positive economic policy would do would be to help those businesses. Instead, the successful businesses, the ones that are creating jobs, will be pushed into these higher tax brackets. And even just in year one alone, a minimum of $100 million that they could reinvest in their businesses will instead go to Beacon Hill and taxes.
So everything above the bottom line will get taxed more. I mean, every
Yes.
dollar of profit will get taxed more, not
Yes.
just what they pay in salary.
Correct.
Okay, we have time for exactly one more question, ma'am, on the right.
Okay. I have a question about the income gap. In an economics textbook, a little academia here, by Gortney and Stroop, the authors hypothesized that the income gap resulted not from the rich actually getting richer, but that with tax cuts, they actually revealed their incomes. And I was wondering if you have any hard data or if you have considered how the graduated income tax would create an incentive for the rich to shelter their incomes. And just playing with numbers, I looked at if somebody who makes $70,000 shelters 20 away, claims $50,000, the state would actually lose $1,000 in revenue.
I believe that's on the left.
Well, the shelter is usually meant to mean to take advantage of some legal tax mechanism.
Sure, you can afford it.
To invest, and as you say, it's the wealthy are more able to do that. Massachusetts actually doesn't offer a very wide variety of legal tax shelters, so it would be very difficult for wealthy people in Massachusetts to find places to hide that income.
They can't go to another state?
From personal taxation. Pardon me?
They can't go to another state or another country to shelter?
Well, not if they earn it here. The issue is, and by the way, if they invest it somewhere else, they still have to pay it as income when it comes in. So no, there is no really effective way to do that. Now the question is, will it give people a greater incentive to be dishonest? I don't fundamentally believe that.
If I can just say one additional thing, by the way, if it was easy to avoid the increase under question 6 and 7, my assumption is the top 8% wouldn't be spending $3 million to defeat it.
Yes, the answer is, of course, they could leave the state, but also they wouldn't have to. They could hire lobbyists to go to Beacon Hill and make sure that all the top legislators had plenty of money at their political times in order to change the tax laws to benefit them, something which we ordinary citizens couldn't do. But that is also...
You ordinary citizens with the $3 million to fight
I'm
the
talking
tax
about
break for
citizens
92%?
for limited taxation, the people I represent, Mitchell, which, of course, you as a millionaire couldn't begin to understand what we have to go through to pay our taxes. But I want to remind everybody of the federal government, which, when it came up with its graduated income tax, it said the same thing they're saying. It's only going to be on the rich, and it was only 1%. This is back in 1915. Well, over the years, pretty soon we were all rich, because I'll bet you all paid an income tax last year, and the top rate went up to 91% on the rich. But I think this is the point the lady was making. At that time, the rich were paying a very small amount of the total taxes because they found at that rate it simply wasn't worth paying if you could hire somebody to get you out of it. So when the tax top rate on the rich for the federal government was 91%, the rich were not paying their share of taxes. When that rate dropped under Reagan's tax cut, then the rich started paying a larger share. So the point she made was absolutely right. The rich will avoid taxes. The rich will avoid taxes. You can check the data. It's not hard to find. They actually had the rich paying less in taxes before their tax rate was cut than they paid afterwards, because there was no longer any major reason to spend a lot of time and money avoiding paying taxes.
And of course, right after
that
1915 was the Bolshevik Revolution. Look what it leads to.
Okay, well, before bracket creep starts setting in, it's time to move on to the final part of our program, which is summary statements by either side, and we will start with Barbara Anderson.
Thank you. Mitchell started out with kind of a personal statement, so I'm going to do the same thing. I'm going to tell you what got me involved in tax policy and activism in the first place. When I first moved to Massachusetts in 1970, when I was living with my husband at the time, who was working in a boatyard, hard physical work, 17 hours a day, 6 days a week, and this thing called a graduated income tax was on the ballot for the third time. And I asked Andy, what is a graduated income tax? He hadn't studied economics, he hadn't been to college, neither had I studied economics, but I figured at least he grew up in the States, so I said, what's a graduated income tax? And he said, oh, that's the one where the harder you work, the more they steal from you. Now, you might find that a bit dramatic as a statement, but that's why I voted against the graduated income tax. He was making $18,000, counting all his overtime at the time, and they would have taxed him, according to their plan, at 8%. But if you want another statement, how about Dominic Bizzotto, the president of Hotel Workers Union Local 26, who said about today's graduated income tax proposal, we can call it the bracket racket, and they'll pass it on Halloween at midnight. One year they'll hit my bracket, the next year they'll hit your bracket, Pretty soon, everyone has a big tax increase, except the rich, who hire their accountants or take their jobs elsewhere. The reason we're opposing the graduated income tax is we want you to understand just why this thing is on the ballot the way it is. They put the grad tax on the ballot, question 6, basically on the ballot 4 times, and 4 times the voters crushed it, 73 to 27% the last time. What would you do if you were them and you wanted to grad tax you and the political leaders on Beacon Hill and the welfare lobbyists and the human service providers and the public employee union? What would you do if you know if you put it back on the ballot, it was going to be crushed again? You would do what they have done. You would put question 6 on the ballot. All it says is the legislature will set the number and range of brackets, and then you would create question 7, the bait and the trap, to try to lure the taxpayers into doing what they have refused to do 4 times in the past, which is give the legislature new powers to pick us off one bracket at a time and create local income taxes, city, town, county, water and sewer rate income taxes. You would create bait for that trap by offering us all a tax cut goodie, and all we have to do to get it is vote for question 6 and change the Constitution forever. And then they'll come in, remove the bait, and raise our taxes for the rest of our lives. Vote no on 6 and 7. It's a tax trap.
And for the other side, Jim Brody.
You know, I've debated Barbara dozens of times hearing a story about Andy, her first husband, and one night I said to her, how much did Andy make? She said $18,000. I said, my God, all he would need to do is get $84,000 at his second job and he'd be in the next bracket. Believe it or not, in a perverse way, I actually enjoyed tonight, and I'm sure Mitchell did too. I want to thank everybody in a very perverse way for sponsoring this. Let's look at the facts. 92% of the people would pay less. 100% of people would see their services protected. If you're in their position, what do you do to convince voters to vote no on such a plan? You hire a pollster, you hire a California PR firm, and you decide, where are the public scared and angry? They're angry at the legislature. Well, then it's going to give them more power, whether it does or not. They're worried about small businesses. Well, then we're going to raise their tax rates through the roof, even though 82% are going to pay less. It's going to kill the economy, even though 35 states are competitors. 35 states, please don't forget that fact, have a graduated income tax. All of these are red herrings because that's all they can fish up. The issue is what Mitchell said 90 minutes ago, fairness. According to that left-wing think tank, the Federal Reserve Bank, the wealthiest 1% of the population have as much wealth as the bottom 90%. According to the Census Bureau, the gap between rich and poor today is greater than it has been since they started collecting data in 1947. It is not only economically unwise, it is not only socially unwise, it borders on immoral. The grad tax is on the ballot for one simple reason: to bring long overdue tax fairness to people who have had it promised to them for decades but never had it delivered. And the beauty of doing it on the ballot is this: you don't have to call Bill Weld on the phone. You don't have to call your legislator on the phone. You don't have to lobby on Beacon Hill. All you have to do is go out to 50% of your neighbors, ask them to join you in voting yes on 6 and 7, and if it happens, long overdue, much promised, never delivered tax relief finally is given to people who truly need it. Thank you very much, everybody.
Thank you to our debaters and panelists.